Hey traders, today is Thursday, January 8th, and I'm Michael Boudreaux, Senior Market Analyst with StoneX here for a quick multi-time frame look at Bitcoin. Early in the year, we started off the year with a 5-day rally in Bitcoin totaling around 8.5%, which took us nearly 17% off of that November low, failing at a key resistance zone we've been watching for the last few months. As far as Bitcoin corrections are concerned, guys, 2017 saw a correction of roughly 84%. 2021 saw a correction of roughly 77%. We dropped 36% off of the highs with that decline last year. May not be the end of the story. Don't think we're going to get quite deep as a drop this time, but there still is some room for some downside here. So the focus still shifts back to a break of the December opening range. Never gave out, and that's nestled right below resistance. The level is 93,347 into 94,236. You're looking at the objective 2025 yearly open, the 618 retracement of the entire 2025 trading range, and the objective May low. That's continued to cap the advance, and we turned lower from it earlier this week. So the focus is on inflection off of this region. Also note that the median line for this descending pitchfork has been converging there and continues to remain on that level for the next few weeks. So the focus is on inflection off this zone. Here's what the daily chart looks like. We did break out of that October downtrend in late December, and that rally fizzling out again this week right at resistance. So your 3-day opening range for December has never given out. We're still waiting for a clear breakout of that range to give us a near-term directional bias, but it keeps us in that key zone. Monthly and yearly open support comes in at 87,496 and is backed by 85,980. You're talking about the 618 retracement of the advance off that November low, and that's also the objective December low day close, the day that the low is registered, right on the first day of December, the close of that session. Key support is 84,000 into 83,712. Again, that's going to be the 2025 low week close and a basic 38.2 retracement of the longer rally off the 2022 lows. That's the break. And that's also the December opening range lows. That's the break that would open up the next downside in Bitcoin. You're looking at 78,342, which is the 2025 weekly low close. And then 79,127, that's the 2025 low day close. That's your first objective target if we were to break this range lower. So the focus is on this near-term range break. A topside breach and a close above 94,236 would suggest that a more important low has been registered and a larger rebound, larger trend reversal is underway. Topside levels, you're looking at 98,000. Proper into 98,240. That's the June low and the 38.2% of the drop. Broader bearish invalidation, or I should say the level that would put us back for the resumption of the broader uptrend would need to be that June low near 105, 130. So the jury's still out. The threat still remains for a deeper washout. And we'll be looking for a breakout of this monthly opening range for guidance in the days ahead. As far as the FX crosses are concerned, guys, we do have NFPs on tap tomorrow. Quick look at what the euro is doing. We're trying to slide through the 38.2 retracement of the advance off the lows that we made back in November there. The weekly opening range is still preserved. So heading into non-farm payrolls tomorrow, DXY is in a similar scenario. I did shoot a video about that a couple of days ago here on StoneX, so do check that out. But we are looking for potential range breaks both in dollar yen, euro dollar, and DXY as we head into non-farm payrolls tomorrow. Remember, the expectations for a print of about 55,000. Unemployment's widely expected to drop to 4.5%. Keep an eye on the average hourly earnings. That's also seen upticking to 3.6% from 3.5%. Might give us a little bit tell on an update for the inflationary picture. Till then, I'll try to keep you updated as always on X at MB4X. Best of luck trading. I'll see you next week. Cheers.